Let's go ahead and talk about the history of inflation, and we're going to pull up a screen.
Okay, so inflation, what inflation is, like we just said, is the dollar becoming worth less than it was the day before. And, some reasons why that happened, the biggest reason why it happens today is because of money printing. They call it quantitative easing, makes it a little more palatable. But, like during COVID, when we were printing $40 billion a month to throw into bonds, you add that much currency into the circulating supply, into the money supply, it is going to dilute the currency. Think of it like that. It's diluting it when you're injecting more and more money into it. It becomes less potent, like anything you can think of. You take a bunch of Kool-Aid and then dump half a gallon of water into it. Well, it's still Kool-Aid, but it's sort of not,
It's a good way to think of it, is diluting it.
Yeah, it's diluted. It's just diluted.
Yeah.
So the history of inflation, if we look back, let's look at this chart. This is the Federal Reserve chart. It's FRED data. I think FRED stands for Federal Reserve Economic Data. I could be wrong on that, but if you ever want to look at actual economic charts, you've got to look for the FRED data. This is what the Federal Reserve publishes to lay their data out. And as we can see, back here in 1970, we're on a little uptick of inflation. And this is an interesting period of time. America's
like the end of Vietnam.
Yeah. America at this point was an economic powerhouse coming out of World War II. We
1950, 1948,
yeah.
49.
Yeah, well, after 1945, when the war ended and we had all this crazy manufacturing capability, inflation was pretty stamped down. Wages were outpacing inflation for sure. So then in 1971, when we went off the gold standard, at that point, we were able to print money. We were able to actually do the quantitative easing. And we did. We went off the gold standard. We started printing money, and inflation skyrocketed through the 70s. And it was terrifying. It just kept going up and down, but more up than down. And then in 1980, we had Paul Volcker. He was the Federal Reserve chair back then. And I'm sure we've all heard the boomers talk about back when they bought their first house and their interest rate was 16%. That was due to the Paul Volcker era. And what he was trying to do was stamp out that crazy inflation that we experienced through the 70s. So he upped interest rates. They got as high as 18%. And mind you, this is the Fed funds rate. It's not mortgage interest rates, but mortgage interest rates did correlate. They were up to the 16, 17% range. Now, what the boomers never mentioned is their house was only $25,000 to $30,000. Yeah. So, they talk about how bad the interest was, but, it was still arguably more affordable than it is now.
Yeah, because today you have a high interest rate, plus you have a high purchase price.
Well, the thing about interest rates today, if you look at the average of interest rates since interest rates became a thing, since mortgages became a thing.
I guess it's high compared to COVID.
Yes,
right?
We've been acclimated to much lower rates. Mm-hmm. But the actual average of interest rates since they became a thing is like 7.7%.
So we're below average interest rate.
We are, but you got to figure in that average, they're factoring in those 16, 17, 18% years.
Okay.
So yeah, we are historically below the average, but that doesn't mean that they're low.
Right.
They feel higher than ever just because purchase prices are so high. Now, the reason purchase prices are so high is because of inflation. So as inflation happens and the dollar weakens and everything costs more, one thing about that is your house also inflates. So one way to hedge your risk against inflation is to buy a home. You got to think of it like this. Your house is like a life preserver. And as inflation rises, the value of your home rises. So when you buy that house, you're essentially strapping on a life preserver that's going to bring you up with inflation as inflation goes up. It's probably the best, most tangible, and easiest way to protect yourself against inflation that we're experiencing today.
Yeah, I love that. It's like a life preserver because you're floating to the top with it.
You're floating in a sea of value, right?
Yeah, in a sea of value.
Yeah, the sea of the value of the dollar, and as that sea rises, which I guess that's not a good way to put it because that would mean the value of the dollar is rising. But
yeah,
really, it's just a sea of dollars, and as it rises, that's because more dollars are going into it.